The housing market is about to face one of the biggest shakeups yet, and it's all because of one man, Donald J. Trump. With Trump's return to office, we're looking at everything from potentially lowering taxes and more housing options to spiking interest rates and policy uncertainty. In this video, we'll break down exactly how his policies, both the pros and cons, could impact your ability to buy or sell a home. So if you're wondering whether or not right now is the right time to make a move in the market or to wait and see, make sure you stay tuned. These changes could affect every homeowner and home buyer out there. Because Donald Trump hasn't actually taken office yet, there's a lot of uncertainty of exactly what will take place as he becomes the 47th president. But here's the thing, we've already had 4 years with Trump as our president. So before talking about the new policies that he wants to enact, I think it's important to go back and look at the original policy changes that he made in his first term, because much of that is still in conversation today and will likely lay the groundwork for everything that he's going to do moving forward. One of Trump's most significant policies was the Tax Cuts and Jobs Act, which lowered taxes for both individuals and businesses. Now, if you don't remember, the corporate tax rate dropped from 35% to 21%, and many individuals out there saw a doubling of the standard deduction, which in turn stimulated the economy and also increased disposable income, which in turn benefited consumer spending and also trickled into housing. But here's the thing, it wasn't all positive because it also capped the mortgage interest deduction at $750,000 and also limited state and local tax, the SALT tax, to just $10,000, which had a huge impact on high-cost states because it increased the tax burden for many homeowners out there. Now, for the majority of the United States, it didn't have such a negative impact, but if you live in a state like California, New York, any state with really high home prices, essentially you took away one of the benefits of home ownership by limiting how much money could actually be written off. In addition to that, he also did some deregulation back then, which rolled back numerous regulations, many tied to the financial industry, as well as environmental standards and building codes. For example, he scaled back parts of Dodd-Frank, which in turn made lending easier for some financial institutions. And the impact there is it made borrowing a little bit more accessible, which probably created more demand out there in the market, while at the same time increasing some lending standards. And unless you've been hiding under a rock, he also took a big stance on immigration, which led to an increase in deportations and more restrictive immigration policy. While at the same time, there were discussions during Trump's presidency about releasing both Fannie and Freddie from conservatorship, which ultimately didn't happen, and that's something that we're going to talk about today, along with how trade policies and tariffs could also impact housing. The reason I bring these things up is because the previous policies give us clues about what Trump might do again or potentially double down on in his second term. While some of these policies had mixed results, each of them left a mark on the housing market while shaping both supply and demand. Now with that, I want to take a look at some of the pros, if you will, of the things that Trump has talked about while running for his second term of office. And then we'll follow it up with the cons. And then ultimately, I'll give you my opinion as a 20-year veteran of the industry on how it could end up affecting the housing market. The first thing, and probably the most talked about, is Trump wants to lower taxes. We all know that Trump is a businessman, and he has said many, many times that he loves low taxes. And the reason for that is because he's trying to boost the economy and lower rates. And if the consumer adds more disposable income, that impacts affordability. In fact, it improves affordability, which could potentially boost home sale. Now, depending on whether you're a buyer or a seller, it could be a pro or a con. But the reality is if the consumer feels like they have more money to spend, then that's likely going to boost confidence in housing and ultimately lead to higher home prices. Now, the second thing he's mentioned a lot is deregulation, which ultimately means he's trying to reduce the red tape on regulatory costs, on building costs, and in turn making it easier to build homes, while also increasing lending activity and making borrowing easier for home buyers. Now, part of what he's talking about here is opening up federal land for development. And by increasing land availability, this could address some of the supply shortages out there in the market, while at the same time supporting new home construction. In addition to that, he's also revisited the idea of releasing Fannie Mae and Freddie Mac from conservatorship. And this alone could have several implications for the housing market. The one thing it could do, and probably the best thing, is reduce political influence on the GSEs. And this in turn could reduce political sway and allow for more consistent long-term management of both entities. This also might allow more improved financial stability, along along with potential for innovation while providing clearer policy guidelines, while at the same time allowing them to focus on more affordable housing options. But here's the thing, it's not all positive when you're talking about releasing them from conservatorship, as many out there argue that by releasing them, it could allow the financial health of both companies to deteriorate. Now, the third thing that Trump has mentioned is increasing housing options. Now, one of the things that we just mentioned, which was the opening of land for development, is also falls into that same category. But the other piece of it is Trump is trying to also increase housing inventory by reducing demand. And how he plans to do that is by immigration and deportation policies, which could end up having negative implications on the housing markets, which we'll talk about when we talk about the cons. The fourth thing that Trump is big on is infrastructure investment, which is ultimately a positive thing for housing because it creates jobs, which in turn strengthens local economies, which indirectly boosts housing demand. And the last thing that Trump has been really big on is the idea of trying to lower mortgage rates, with his goal of bringing them to somewhere around 3%, with the idea that this is going to help affordability and also boost buyer demand. But here's the thing, a lot of what we just discussed also has a trickle effect, which could end up being a negative for the housing market. And the first one we'll talk about is those deportation and immigration policies. Because yes, you are likely to increase housing supply if you get less home buyers out there in the market. But here's the question I want to ask you. How many of those that are actually being deported are potential home buyers out there in the market? Understand, it's very difficult to get a mortgage. So if you don't have a social security number, you don't have a residency card, you don't have a green card, then chances of you buying a home are very difficult. Now, I do believe that illegal immigrants do impact the rental side of the market. I have a very difficult time believing that they're the ones driving housing costs up. But here's where I think the deportation thing is a bigger problem. By reducing illegal immigrants, you're likely reducing labor force out there in the market, which likely translates into decreasing construction labor and potentially slowing down the building of new construction. Now, I know what a lot of you out there are saying, well, by reducing that construction labor, that means Americans can go out and do those jobs. Well, here's the thing, Americans can do those jobs now. They're just choosing not to. And maybe in some cases it's the pay, and in some cases maybe they just don't want to do the work. So if Americans are going to do those jobs, then that likely means construction is going to have to pay more for those jobs, which likely means those builders are passing that higher cost onto the people buying those homes. Now, the next thing that Trump has mentioned a lot of is higher tariffs. But it's important to understand what higher tariffs mean. Tariffs are typically paid by the person that's receiving those goods, which means if the tariff cost goes up and Americans are the ones receiving those goods, then they're likely to take that higher cost and pass it along to the consumer, which also means an increase in construction costs, which again can slow down new construction. Now, understand, a lot of what we're talking about today is just hearsay. We don't know it to be fact at the moment. Now, we have a really good idea of what Trump is trying to do, which is stimulate the economy. And because of that, I think it actually could have a negative impact on housing, at least in the short term. Over the last couple of years, we've been dealing with a really strong economy, one where inflation peaked at 9.1%. And because of that, the Fed has gotten really restrictive, which in turn has caused mortgage rates to go higher, while unemployment has gone up, ultimately bringing inflation down. But here's the thing. We know that Trump is a businessman. He likes low taxes. He likes growth in the economy, which is ultimately going to be his goal. And here's where I struggle with this whole idea of lower taxes and lower interest rates at the same time. I just don't know how you do it. Because if the economy is booming, that likely means that we're getting more jobs. Unemployment is likely going down, which in turn is exactly what the Fed wants to see, right? They've been trying to get this soft landing for the better part of 2 years. And at the moment, it looks like they've gotten it because inflation has come down while the job market has remained more or less stable, which means the Fed's actually accomplished both parts of their dual mandate. Now, because of that, the Fed has taken their foot off the gas pedal and started to put it on the brake. And in doing that, they've lowered the Fed funds rate by 75 basis points. And that's because they believe their policy has been too restrictive. But here's where I want to ask you a question. Does the Fed start to change their mind on reducing the Fed funds rate further if they continue to see the economy grow? And that's why I believe that growth in the economy could actually be a negative thing for the housing market. And it's because it could allow interest rates to stay higher for longer, which ultimately affects affordability as well as housing demand, while at the same time allowing inventory to likely grow. Remember, when you look at history, interest rates typically go lower when the economy starts to suffer. So if we see a prospering economy, does that mean we're not going to see lower mortgage rates? Remember, all housing is local, but it's often often influenced by multiple complex factors, and these policy changes that we've talked about today could have varying effects. So my question to you is, will Trump's policies help or hurt the housing market?